Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our Technology Virtual Investor Conference. Our next live presentation is from Victory Square Technologies. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in meeting with Victory Square Technologies, please click on the Schedules Meeting tab found in the platform navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Shafin Diamond Tejani, Chief Executive Officer of Victory Square Technologies, which trades on the OTCQX Best Market under the symbol VSQTF and on the CSE under the symbol VST. Welcome, Shafin.
Thank you so much for inviting us to participate. And thank you everyone for tuning in to today's presentation. My name is Shafin Diamond. I'm the CEO of Victory Square Technologies. Victory Square is your key to investing in a portfolio of the world's most innovative and disruptive early stage companies. With the purchase of VST shares or VSQTF shares, which are public on the CSE, OTCQX, and the Frankfurt exchanges, you get access to a portfolio of some of the most disruptive early stage companies, a number of them that are private from all around the world. Before we get into the presentation, I'd like to give you a quick background on myself and some context to how Victory Square came to be. I started an online dating site in the mid-90s out of my dorm room. I saw how the internet at the time was going to change the way we accessed information and connected with one another, communicated, etc. And so we built an online dating site in 1996. And we became very good at driving traffic and converting that traffic into paying customers. At that time, as I'm not sure if many people can remember, a lot of the ideas around the internet in the late 90s were mainly ideas, blue sky ideas, but not really with revenue. We were fortunate that we had a positive cash flow generating business. And then we decided to buy, build, and invest in other businesses that either solved a pain point in what we were doing or businesses that we could drive users from our dating site onto so that those businesses would be profitable and cash flow early on. Today, we refer to that model as a venture build model. And this venture build business model is very key to what Victory Square does today. For me personally, since the mid 90s, we've had the good fortune of launching over 40 companies in over 20 countries, generating over $1 billion in enterprise value. So basically 2 decades of being able to being early to catch successive waves from Internet 1.0, mobile to the disruptive tech of today and tomorrow, like artificial intelligence. So there's a quote: "Founders who live in the future have the best chance of winning big." And at Victory Square, we believe that extraordinary performance comes from seeing things that other people don't see. Every industry at every level is going to be disrupted over the next 10, 20, 50 years. History contains proof of that. I'm sure anyone that's been tuning into the news has been hearing about ChatGPT 3 or now ChatGPT 4 and AI, etc. But we believe the tech giants of the next decade are being incubated as we speak. And we've witnessed enormous wealth creation, for investors over the past 20 years who got early access to, current tech giants that disrupted the retail, media, hotel, taxi industries, and many other industries. And this obviously means that there's significant growth opportunities for investors today. But with so many companies, out there and so many nuanced segments, it also means that these opportunities are risky and difficult to find. During the dot-com era of the 90s, I remember most of these disruptive companies were based in the US. But over the last 20 years, great is coming from everywhere. Some of these brightest minds and companies are being formed in India, in China, in Brazil, and in other parts of Europe. So how do investors bet on tomorrow's next giants? How do they even identify them? The big problem here is most investors are unable to invest in some of the world's most attractive early stage companies. Generally, you're limited to what's, from a private perspective, what's geographically located near you. And so even if you are to find out about a company, let's say in another area, in another country, again, vetting that company, getting access to audited or transparent, books is very, very challenging and difficult to do. So, at Victory Square, we identify this new breed of companies that are solving pain points and rethinking the customer experience for tomorrow. So think sectors like climate and digital health, as examples. Victory Square provides investors with a liquid way to invest in early stage technology companies without buying a venture fund that requires accredited investor status or multi-year commitments. We were basically founded to fill this early stage investment gap for a broad range of investors. So again, we provide VC investment access to these next generation of tech companies in an audited, transparent, and liquid investment vehicle. So effectively democratizing access to the next generation of the best startups. Just move to the next slide here. So at a quick glance, here's a snapshot of Victory Square. We have a diverse portfolio of 25 companies from around the world. So companies that come from Brazil, China, India, the US, Canada, Europe. The sectors that we're focused on right now are digital health, artificial intelligence, machine learning, blockchain, virtual reality, augmented reality, mixed reality, gaming, and climate tech. Since inception in around 2017, our NAV, our net asset value, has grown from about 4 million to about 75 million today. So, this basically means that we have equity stakes worth $75 million, and anyone that's, monitored our stock, our current market cap is around 12 million. So this is a great entry point from a VST perspective. There's a massive disconnect between, the assets that we hold and what our current market cap is. So for example, a 12-cent share today generates, 75 cents of VC holdings. Company's balance sheet, again, very, very solid. No concerns for dilution. We have access to over 24 plus months of runway, cash and liquid securities around 6.8 million. And in the past, when we founded VST, it was set up with a $10 million convertible note provided by myself. So as the business saw opportunities, it could tap into that if it needed to, and it would just convert at market prices throughout the year. Again, very strong insider management and ownership. So there's an alignment with investors. As the CEO and the largest shareholder, I currently hold around 15% of VST shares, and have been actively on the market, buying a certain percentage of the average daily traded volume since February. So the business model, this venture build business model I kind of referenced earlier, this is what we believe is our competitive advantage. So, how do we find these needles in a haystack? Well, we built a magnet. And so the whole process starts by first identifying a pain point in an industry or an addressable market that we believe that we have some sort of advantage that we want to go after. So that pain point could come from something that we're seeing within our existing portfolio. It could be from just having given that we have a large advisory network, advisors pointing out areas that we should look at. And so we first want to do due diligence on an area or a sector that we believe is going to be not only big, but more importantly, that we have some sort of subject matter expertise or some sort of competitive advantage in. Once we've determined that, we then reach out to about 80 incubators around the world. So over the last decade or so, we've set up a really, really good network with different accelerators and incubators in different countries around the world. And we're able to tap into some of the brightest entrepreneurs. And once we kind of, in essence, put out that RFP, those accelerators and incubators will share them with companies within their geographic area, and then they'll apply with their solution to the problem that we're kind of pushing out. Once we've identified or shortlisted those companies, we then spend about 4 months with them to really not only validate the technology or the idea, but the most important thing is, because we're early stage investors and we take material stakes and we're actively involved, it's really important that there's an alignment with the founder. We're really betting on people. And so we spend that 4 months to really get to feel if this is the person or the team that we want to bet on. And once we make that investment, we generally spend 12 to 48 months with that team or that company. We have advisors in a variety of sectors that we'll then bring on board to help that company build, grow, scale, commercialize. And then usually, after that 48-month period, we then look at monetizing that asset. And that's where that company, that investment can be spun off as its own public entity. We can raise capital to grow it privately, or again, conduct M&A, whether that company continues to acquire other assets within its sector or space, or vice versa, it gets acquired. And so it's during this spin-off period, which is really kind of our monetizing time for VST, and this kind of gives an idea of what the cycle is. So from inception of identifying the opportunity to spin off, you're looking at around 12 to 48 months, and that is because these companies we enter in very, very early, which allows us to take a material stake. Now, at that spin-off point, from a Victory Square perspective, at month 48, we have the opportunity to take money off the table if we believe that the valuation or the value of the company has grown considerably greater than what our cost base is. And so we can sell some of our position in that company to then again reinvest in top of the funnel. And we did this in 2020. So again, the process started in 2017, but in 2020, some of the companies that started to materialize, and we were able to sell some of our shares in companies like Fans Unite and Argo Blockchain in 2021, which again, were trading significantly higher than our cost base. And we were able to use that capital to reinvest into new opportunities. We also have the opportunity and ability to do an equity raise if we believe that our share price and the terms are reasonable and we're bringing on strategic investors. And so in November of 2020, we did a strategic financing at 52 cents a share. And just a note, I participated in that financing as well. I invested $500,000 into that financing. But again, only when we believed that our share price was trading at a premium or good level, and we could bring in strategic investors. And the third is, in today's market, we believe that not only our share price, but a number of our companies and portfolio company share prices are trading at a discount to what we believe their true value is. And so we would not want to sell any, a stake in those companies, nor would we want to do any sort of equity financing for Victory Square. But rather, because we've got solid assets, we're able to access strategic debt, if that may be the case, against those assets to then again reinvest into the funnel, knowing that, we believe that the value of those assets will grow significantly. So it's more valuable for us to, potentially access debt on them strategically than to sell some of those companies. So we have a lot of flexibility. This model was built to be self-sustaining and not really be dependent on one avenue and the requirement for additional capital or dilution. Currently, right now, our main focus is the digital health sector, because that's where we've got some really strong first mover advantages and a lot of momentum in that area. So where we're at today, like I mentioned, we started in 2017, and since then we've evaluated about 1,000 companies and startup ideas from around the world. And we've made the decision to go deeper into 25 of those companies, of which I would say 10 or 11 are really material and very focused, and the other are still in different stages of incubation. We've invested around $13 million to date, and the value of that portfolio sits at around $75 million. I'd mentioned earlier, it's grown from $4 million in 2017 to about $75 million today. In 2021 and 2022, we saw significant jumps, as most investors probably saw, in the technology sector and space. So we've seen a bit of a markdown on our on the value of the assets, in the past 6 to 8 months, and so you'll see a bit of a dip from 2022 to 2023. Our goal, is to double our NAV every 3 to 5 years, and so to continue to compound the growth of these assets. And our forecast right now, based on tracking our portfolio, we estimate that by the end of this year, we anticipate our NAV to be around 127 million. So how is the NAV calculated? So this is an important thing in that we use this as a metric for us. Really, we're looking at our the cash invested and the ROI on that cash and the compounded growth of that. So again, the NAV is calculated. Our companies are split into 3 categories: public holdings, private holdings, and incubating. So for valuing the public holdings, again, we usually take the most recent trade multiplied by the number of shares we hold in that company. And it's a mark to market. That's how that number is and value is created. And I think roughly it's around 23 million. And these numbers are as of, I think, end of last week or beginning of this week. So they might have adjusted a bit. So the public holdings are valued at around 23 million. Then we have a private companies, and annually we have to get the company needs to be audited. So our auditors require a third party pricing agency to come in and review those holdings. And so they'll review a number of them, and they'll look at the company's most recent financings, term sheets, and then there's also a category there that our management reviewed to determine the value of those holdings. Those holdings right now I think are roughly valued around 42 million. And then we have incubating. And so again, I mentioned we buy, build, and invest. So in the build section of it, we're always incubating IP internally. And within these incubated companies, we generally will take a valuation of 2 to 3 million as the total value of some of these companies that are being incubated. And in most cases, those companies normally, from a fair market perspective, would be valued anywhere from $8 to $10 million, but we take a very conservative approach to that. Right now, within the incubating portfolio, we're touching a number of the sectors that I mentioned earlier, but the ones that we think are going to materialize sooner are around the digital health sector, specifically around men's health and women's health. We're seeing some really interesting momentum on the IP we have in those 2 areas. This slide really covers the diversity of the portfolio. So not all the companies are listed in here, but what this represents is the percentage value of each of these companies to the $75 million asset value that we have in VST. So you'll see, there's an outlier in the portfolio, which is Hydrate, which makes up a big chunk. And I'll get to that company a bit later, and we'll dive a bit deeper into that as a case study. But you'll see, a lot of diversity there, not only from company, but from sector. And so, as we see the markets go, up and down, and as we see interest in technology sectors go up and down, we've got this balanced approach where there's always something that's kind of, balancing out the others. If, something is kind of a bit quieter, one of our other portfolios or sectors, is getting more attention. And specifically right now with climate and digital health, we feel like there's a lot of momentum, not only internally within the business, but externally with respect to interest from investors. Just to highlight some of these companies, there's VSDH, which is Victory Square Digital Health. It's a wholly owned company. Through there, we've built up a network of health professionals across the U.S. So both physicians and nurse practitioners in all 50 states. We also have a pharmacy license and a lot of tech and IP in that entity. And we use that entity to, license some of that tech out within the digital health and sector and space. There's another company, again, in the digital health space called Victory Square Health, which is based in Brazil. And this company is focused on, they developed a roster of diagnostic tests for Brazil. and they've built technology and IP for the at-home care testing market. So in the US and Canada, we're a bit spoiled in that we see a lot of innovation early. So we've seen a lot of innovation with respect to virtual care, at-home care, point-of-care testing, different types of diagnostic testing. But in other markets such as Brazil, which are massive, there we have a bit of a first mover advantage in that there are not a lot of players, and it's not a concentrated market like it is in the U.S. And so there are a couple of U.S. companies like Everlywell or Rupa Health as examples, which are kind of what Victory Square Health is doing in Brazil. And that organization and that company had already established really good relationships with Anvisa, which is the equivalent of the FDA or Health Canada, and a number of state and government bodies, manufacturers, and distribution partners. So we believe that they've got a big first mover advantage to be a big disruptor in Brazil. And then I'd mentioned earlier, there's a number of IP that we have within that are being incubated within the healthcare space. So specifically, there's a company called Discrete Care, which is focused on men's and women's health, hormone testing, perimenopause, PCOS, TRT. So there's a big growth in personalized health and personalized supplements, and that's where we're focused on. And then, looking at Stardust Solar, which again is a company that that's been in the portfolio for a while, which is focused on solar and the climate tech and renewable space. And again, this is a company that you'll hear about later, which is one of the companies that's planning on being spun off and listed this year. They've had 100% growth, in revenue year over year for the past 2 years, 400% franchise growth. They've built a franchise business within the solar space, and they have one of the largest solar training. They're one of the largest solar training providers in Canada. Another company in the blockchain space, Covalent CQT, basically building the Google for the blockchain. Again, disruptive team that's been around for a number of years that are missionaries within that specific sector and space, and some others on there as well. So again, diversity in portfolio. There is an outlier in our portfolio, which we believe is Hydrate, which I'll get to. But again, there's diversity in that there's a number of sectors and that really kind of balance out our portfolio, which really, again, is risk mitigation for us. So building a company is the ultimate team sport. We've assembled some of the smartest people and partners from a wide array of spaces, and not only external, but given that we've got this portfolio of companies in all these different areas, our ecosystem is very powerful, and we're able to cross promote ideas, customers, best practices, tech. And so we've got a really strong team internally, external advisors, and then within our ecosystem to really give our companies an unfair advantage to be successful. Some of these advisors include the director of Waterloo's Institute for Machine Learning and AI. And so Waterloo is kind of like the MIT of Canada, or the head of BC Diabetes. So again, we've been able to bring in a lot of subject matter expertise, which we believe give our companies and Victory Square an unfair advantage. Myself, again, I mentioned I started my tech journey in 1996, and I've been fortunate to have 20 plus years of success globally, and very fortunate that in the past we've received awards such as EY's Young Entrepreneur of the Year, BC Tech Person of the Year, Canadian Angel Investor of the Year. So again, we've got a long storied track record, which has been recognized for what we've done. Switch slide, sorry. And again, in the sectors and spaces we're going into, to mitigate risk exposure for ourselves and to give us the best chance of success, we really needed to build a solid, foundation. And so, we in Vancouver, we have, one of Western Canada's largest tech hubs called Launch Academy, which we had partnered up with. And for a number of our companies, this was this, bricks and mortar facility that we could bring companies in from around the world and monitor for 4 months, and bringing in some of the top advisors to provide guidance to some of these companies and give us advice before making an investment in them. And this has allowed us to build a strong international network of 200 plus founders, investors, tech accelerators and venture capital firms, from more than 60 countries around the world. We also have access to what's called the Startup Visa Program. So when we identify a really strong company globally, we have the ability to bring that company to North America through the Canada Startup Visa Program, which is really strategic in that when you're competing to get access to invest in a deal, sometimes it's not money, sometimes it's other types of strategic advantages you can offer the teams, and the ability to come to North America for companies that are based in India and Brazil and other areas is strong. And so, that's given us a really, really good advantage to get access to really good deal flow. And also with a lot of the companies that we bring on board, we're able to get them a number of perks. So we have relationships with, Amazon Web Services, Microsoft Azure, Google Cloud, GitHub. So this allows us to also offer these companies non-dilutive perks from some of these companies, which they would most likely be using, anyways as service providers. And both Victory Square, our team, and our companies have been covered in media and news publications all over. Easy to just Google, our names or Victory Square, and you'll see some of the pieces, thought leadership pieces that we've written on some of the sectors that we're in. So I want to highlight a portfolio company that we're very bullish on. Again, it right now, counts for a significant value, about 22% of our NAV at this point, and it's a company called Hydrate, and Victory Square owns around 74% of it. And so again, this has a huge impact. The success of Hydrate has a huge impact on Victory Square and our shareholders. So, in just a few years, this was a company that we acquired at the beginning of 2021. And we've had our team kind of go deep into working with the founder, Shane Madden there to really, take advantage of the first mover opportunity that he had kind of created. And what Hydrate does is it's become an industry leader in providing, over 4.2 million nurses in the U.S. With a turnkey platform to participate in the practice of mobile medicine in all 50 states. So in the US, in order for a nurse to be able to offer, or nurse practitioner to be able to offer services outside of a clinic or hospital, they need to have a medical director, the technology, and the proper licenses. And so Hydrate's built an all-in-one solution for nurses, including a white label platform, which includes a medical director, a pharmacy, and all the required licenses, so they can start their own mobile health and wellness service overnight. And this is important, I think, as most people that have touched on the healthcare system in the last 2 or 3 years, given the COVID pandemic, it put a lot of stress on the traditional infrastructure. And so this has opened up the adoption and acceleration of virtual care and at-home care. And also, specifically within the nursing space, nurses have been burnt out. So you're seeing a rise in traveling nurses, and nurses wanting to have their own business that they can facilitate for a smaller number of clients and book their own hours, almost an Uber for nurses. But Hydrate has already onboarded over 2,000 nurses and service providers across the U.S. And some of the services that they provide range, but a couple of examples are telehealth, IV infusion drips, Botox, other types of medical spa, Medispa type treatments, and then COVID-19 testing and more. The growth since 2021 has been significant. I think they're on track this year for top line revenue of around 22 million. So again, this Victory Square owns around 74% of Hydrate, and so we believe this will be an outlier, and it'll really add significant value to VST. We've done some internal models, which we do on all our companies, but we did an EV sales multiple based on Hydrate's 2023 exit revenue. And even though the industry mean multiples are on 17 times, we used a 5-time multiple on their we didn't use the top line revenue number. We used the 12.7 million, which will be its booked revenue, and this values Hydrate at around 64 million. Now, with Victory Square's ownership, this adds about $47 million of value to VST's NAV, and this is where we believe we'll get the significant amount of our NAV growth from today to the end of this year. And anyone, speaking of Hydrate, the CEO of Hydrate, Shane Madden, will be presenting on OTC, I think, later today. So again, it'd be great if anyone wants to tune in and they can do a deeper dive into that specific business, which we're really excited about. So, what are the catalysts? Why should people be paying attention right now? I'll talk about four. One, I just mentioned the growth of Hydrate. We expect that growth to continue, and it's an outlier in our portfolio. So I think we believe that a big catalyst for us this year will be the increase in the value of our asset, or our ownership of Hydrate. Spin-offs. So I mentioned, we have these companies that spin off every 48 months or so once they've kind of matured. And so there's two that are on tap for this year: Stardust Solar and Draft Label Technologies. Again, we also have new companies being incubated, touched upon in the digital health space, specifically around men's and women's hormones, and a platform for weight loss, which will be coming out. And then just the NAV growth, which we believe will jump from around 75 million to 127 at the end of the year. So again, why invest now? The biggest reason I would say is entry points. Again, we have equity stakes worth over 75 million, which our market cap is 6 times lower than that. So we think it's a great entry point. We're trading at an 83% discount to NAV right now. So a great time to start following this story. And lastly, this is a way for investors to get access to a portfolio of the world's most innovative and disruptive early stage companies, within one share, one stock. Diversified risk investment adjusted approach. There's experienced leadership, active investment management, and liquidity. So as an investor, you're not tied into a private company. You have liquidity given that VST is trading on the CSE, OTCQX, and Frankfurt listing. I just got a cue that I got to wrap up, but thank you everyone for tuning in, and to the OTC for allowing us to share Victory Square story. If you'd like more info, please feel free to reach out to us at ir@victorysquare.com, or you can check us out at victorysquare.com or look me up on LinkedIn. So I guess we'll get to the Q&A. Let me pull up. So first question, can a nurse domiciled in Canada take advantage of Hydrate's service? So it's separate. So we only, within the US market, we only work with US certified nurses and nurse practitioners, but there is a service coming for Canada specifically now. I think that there is a process though, that if you are a Canadian nurse, that you can go through to be able to be eligible to be able to work in the US, but that's a Hydrate specific question that I can share with the team and then post it up later. Next question: everything looks and sounds great. Why is no big investor interested in buying the stock? So I think we've done a poor job of, and I've done a poor job of getting this story of Victory Square out to more investors, new investors. And so I think for us now, we're operators, and so we've kind of been head down building. But a big focus for us is going to be to start to share the story with more investors, new investors, and hopefully that will generate interest. I apologize. I just got a note that our time has elapsed. I've got to sign off, but if for any of the questions we weren't able to take, please email them to ir@victorysquare.com, and we'll reply to them personally to you and set up a call. So I apologize for anyone that if we weren't able to get to the questions, but yeah, please send us a note. So thank you everyone for tuning in. Thank you for the OTC.